You know, in today's world, we're just absolutely swimming in information, aren't we?
Completely. Reports, data, headlines, it's constant.
Yeah, and the real challenge isn't just finding it. It's figuring out what actually matters, sifting through it all to find the essential stuff. Like, what's the real story when you're staring at a page full of numbers?
It really is about finding that signal in all the noise.
Yeah.
Digging past the surface level to understand what's truly going on.
And that's exactly what we're setting out to do today. Welcome, everyone, to the Deep Dive.
Uh,
Today, we're taking a really close look into the latest financial results from Piramal Pharma Ltd. This is for their quarter ended June 30, 2025, which they call Q1 FY26.
right. And all our insights, everything we're discussing, it's pulled directly from their official company document.
Exactly. We've got their unaudited standalone and consolidated financials, a detailed press release, and their investor presentation, all released pretty recently on July 28th, 2025.
So our mission for you today basically is to cut through those figures. We want to pinpoint the most important bits of information, maybe uncover some surprising facts, and, well, ultimately help you understand what these results actually mean, especially if you're someone who likes to stay genuinely well-informed.
All right, stage set. Let's pull back the curtain then on Piramal Pharma's Q1 FY26. Starting high level, what was the initial impression? Did these results paint a clear picture right away, or were there some immediate puzzles?
Well, looking at the consolidated numbers first, the revenue from operations, it came in at 1,934 crores for the quarter.
Okay.
Now, that was actually a slight dip, just 1% year over year, compared to the 1,951 crores they did in Q1 of the previous year.
Just 1%.
Yeah. And then on the profitability side, they reported a net loss after tax of 82 crores for this quarter.
Still a loss then.
Still a loss, yes, but in this interesting, it's actually an 8% improvement from the 89 crores loss they had in the same quarter last year. So, a bit of a mixed bag right off the bat.
Okay, wait though, because here's where it gets really interesting, right? The company itself pointed out something pretty important about that revenue number.
Uh-huh.
They said that if you exclude the impact of destocking in one large CDMO product, their year-over-year revenue growth was actually in early double digits. Can you unpack that a bit? What exactly is this destocking? Is it like a one-off thing?
Yeah, that's really the key distinction they wanted to make. So destocking in this situation, it basically means a large customer reduced their inventory levels temporarily of one specific product they get from Piramal's CDMO segment. That's their contract development manufacturing arm.
Ah, okay.
And yeah, it's generally seen as more of a one-time event tied to that specific product and customer, not something systemic you'd expect every quarter.
Yeah.
So it does, really reframes that top-line revenue figure. Suggests the underlying business, well, it's actually growing pretty decently.
Got it. That makes sense. So if we then look at EBITDA earnings before interest, taxes, depreciation, and amortization, always a key metric for operational health. What did that show?
Right. So EBITDA landed at 165 crores in Q1 FY26. Now, that was a more significant drop. It's down 26% from the 224 crores in Q1 FY25.
Oof, 26%.
Yeah. And that pushed their EBITDA margin down from 11% last year to 9% this quarter.
So that really highlights the impact of that destocking you mentioned.
Exactly. It really underscores how one specific issue, even if maybe temporary, can hit the core earnings pretty hard, even if other parts of the business are doing okay.
Well, that's why they made sure to highlight that exclusion.
Right. So the big picture isn't just the headline numbers, it's the story behind them. That slight revenue dip and the net loss, they could be a bit misleading if you don't dig deeper.
Precisely.
The real takeaway seems to be how they're managing these specific, maybe temporary headwinds, while the core businesses are showing some surprising underlying strength, seeing beyond the headlines.
Absolutely. It's about understanding the context. Okay, so we've got that initial overview sorted. Now let's peel back the layers, as you said, and look at the individual business segments. Where should we start digging in?
Yeah, let's do that. Let's start with their biggest segment, the Contract Development and Manufacturing Organization, or CDMO.
Okay.
So reported revenue there was down 6% year over year, came in at 997 crores.
Right, the segment hit by the destocking.
Exactly. But like we just talked about, the really important context is that excluding that specific destocking impact, their base business actually saw mid-teens growth, which is pretty impressive.
In mid-teens, wow.
Yeah. And they said this growth was mostly driven by their overseas facilities, which, by the way, also saw better profitability compared to last year. They also mentioned good growth in nutrition supplements and their generic API businesses.
API being the active pharmaceutical ingredient.
That's the one, the
Yeah.
core component of a drug, yeah.
Yeah.
Operationally, they're also focusing on, cost optimization, better procurement strategies, operational excellence programs, that sort of thing.
That underlying growth sounds strong. What about quality and expansion in CDMO? That feels critical in pharma.
Hugely critical. And they had some really good news there. On quality, they had a U.S. FDA inspection, that's the U.S. Food and Drug Administration, at their facility in Aurora, Canada.
Uh-huh.
And it closed with 0 observations.
0. That's
It's
huge.
fantastic. It means 0 OAIs, which stands for Official Action Indicated.
No.
It really shows their high standards and compliance, which is a major plus. And they've actually maintained this 0 OAI status from U.S. FDA inspections since way back in 2011.
Wow, consistent track record.
Very consistent. And then on expansion, they've broken ground on a big capacity expansion project in Lexington in the U.S. That site specializes in sterile injectable drug products.
Okay.
This expansion is specifically aimed at boosting their integrated ADC program, that's antibody drug conjugate, which is a really hot area in pharma. They've branded their program AD Celerate. This is all part of a larger $90 million investment across their Lexington and Riverview facilities.
Okay, that sounds incredibly positive. Great quality record, investing in cutting-edge stuff like ADCs. But you did mention some external market headwinds affecting CDMO earlier. So what does this mix mean for the segment looking forward?
Yeah, well, despite all those positive internal steps, the CDMO segment is facing some external challenges. They specifically mentioned an incomplete and inconsistent recovery in funding for emerging biopharma companies.
Ah, the biotech funding crunch we've heard about.
Exactly. So basically, smaller biotech firms, who are often their clients, are finding it tougher to get funding for their drug development projects.
Which means they take longer to make decisions.
Right. It leads to prolonged decision-making by Piramal's potential customers. And this is all kind of compounded by ongoing geopolitical issues and uncertainties around global trade policies. So yeah, they're navigating a pretty complex external environment right now.
Okay, so CDMO, underlying strength, big investments, but definitely grappling with that wider market environment. Did their complex hospital generics segment face similar issues, or was it a different story for CHG?
Moving on to complex hospital generics, or CHG. Yeah, it's a bit different. They saw a modest 1% year-over-year revenue increase, reaching 637 crores.
Okay, so slight growth.
Slight growth. They explained the slower pace this quarter was due to the phasing of institutional orders. Basically, the timing of big bulk orders from hospitals or healthcare systems. They seem confident that growth will pick up later in the financial year.
Right, timing issues.
Yeah. Growth was a bit slower in the important U.S. market, but that was partly offset by some encouraging growth in certain markets outside the U.S.
Any operational highlights there?
Yes, a significant one was getting U.S. FDA approval for their facility in Digwal, India. It's now approved as a manufacturing site for sevoflurane API and the finished product for both human and veterinary use. So that opens up new avenues.
Good diversification.
Definitely. They also noted lower sales in intrathecal therapy, but said that was due to shipment timing right at the end of June, and they expect that to recover in Q2. For injectable anesthesia and pain management, they mentioned initiatives to fix supply constraints are on track, but the real benefits probably won't be seen until FY 2027.
Okay, long-term fix there.
Seems like it. And in their differentiated and specialty products area, they launched a product called Neoatricon in some EU markets in Q1, with plans for more markets in Q2.
Okay, so CHG navigating some timing, but pipeline looks okay. What about the consumer side? How did Piramal Consumer Healthcare, or PCH, perform?
Now PCH, that was a really strong story this quarter.
Yeah,
They delivered a very healthy 15% year-over-year growth, reaching 302 crores.
15%. Nice.
Yeah, really solid. A big driver was what they call their power brands. That includes Libbles, iRange, and CIR. Those key brands grew 18% year-over-year. And they now contribute almost half, 49% of the total PCH sales. So that strategy of focusing on core brands is clearly working.
And e-commerce. That's crucial these days.
Absolutely. And they're doing well there too. E-commerce sales showed really impressive growth, up 41% year-over-year.
41%.
Yep. And it now makes up 23% of total PCH sales, so their digital strategy seems to be paying off nicely. They also launched 7 new products in Q1 and kept their advertising spending steady at 13% of PCH sales.
Okay, so PCH is definitely a bright spot. Strong growth, good brand focus, great digital performance. Before we zoom out again to the bigger picture in the future, maybe just quickly touch on their other investments or partnerships.
Sure. Piramal Pharma also holds stakes in some associate companies. One is AbbVie Therapeutics India Private Limited. They're a market leader in ophthalmology here in India.
Right.
And they also have a strategic minority investment in a company called Japan Bio Private Limited. They operate in the biologics, biotherapeutics, and vaccine segments. So that indicates they're keeping an eye on, future growth areas in biotech.
Makes sense. Okay, so we've looked at the segments. Let's pull back again. Beyond the day-to-day ops and the segment details, what does this deep dive tell us about Piramal Pharma's overall financial health and, maybe more importantly, their future direction? What's the long game look like?
Well, looking at financial health, their net debt to EBITDA ratio is currently at 2.6 times.
Okay, 2.6x, manageable.
Generally considered manageable,
Paper.
yeah. There was also an interesting exceptional item this quarter. They received about 20.74 crores. This was from a full and final settlement of an insolvency case against a third-party supplier.
Ah, like getting money back they thought they'd lost?
Pretty much. What's interesting is that they had previously set aside or provisioned 32.27 crores for this claim. So getting 20.74 crores back is a positive swing.
Right.
And what's fascinating here is how these sorts of one-time events, while positive in this case, can definitely impact the reported net profit or loss figures. They can sometimes mask or distort the underlying operational performance if you're not looking closely.
Yeah, it's like getting an unexpected refund. It helps the bank balance that month, but it doesn't really reflect your regular earnings or spending habits.
Exactly that. It's a good analogy.
That's a crucial point. It really highlights how these one-offs can obscure things. Makes you wonder about other, maybe less obvious factors influencing the numbers. What about things like their commitment to quality, which you mentioned, and sustainability? Those feel important for long-term health, too.
Absolutely. And they consistently emphasize their quality commitment. They call it a best-in-class quality track record. As we discussed, maintaining that zero OAI status from the US FDA since 2011, including the recent zero observations in Canada, that's a huge testament to this focus.
Definitely builds trust.
It does. And on the sustainability front, they were given an ESG rating of 61 for the last financial year, FY 2024, by NSE Sustainability Ratings and Analytics Limited. ESG, of course, standing for environmental, social, and governance. It's a measure of how they're performing in those non-financial areas. And a rating of 61 suggests they're making, solid progress on their sustainability efforts.
Okay, so quality and ESG seem to be strong points. If we connect all this to the bigger picture, then it sounds like they're building on a solid foundation. What are the long-term aspirations? You mentioned FY 2030 earlier. This must be where the strategic vision really comes into play.
Absolutely. The chairperson, Nandini Piramal, has laid out some pretty ambitious goals for FY 2030. They're aiming to become a US $2+ billion revenue company.
2 billion plus.
Yeah, and achieve approximately 25% EBITDA margins. They also want to bring that net debt to EBITDA ratio down significantly to around 1x.
From 2.6x now down to 1x, that's quite a deleveraging target.
It is. They're also targeting profit after tax, or PAT margins in the early teens, and aiming for high teens ROC, return on capital employed, which shows how efficiently they use their capital.
And this is all organic growth.
That's the key point they made. These targets exclude any potential mergers or acquisitions, any inorganic growth. So it's all based on expanding the existing business.
Impressive ambition. Did they break that down by segment?
They did, yeah. By FY 2030, the plan is for CDMO to hit US $1.2 billion in revenue with around 25% EBITDA. CHE is targeted at US $200 million revenue with double-digit EBITDA. And PCH is aiming for US $600 million in revenue with EBITDA margins of 25% or more.
Wow, clear goals for each part of the business. It really does paint a picture of a clear roadmap for pretty significant growth and improved profitability.
Definitely. It shows a strong long-term vision.
So after diving this deep, what are the main takeaways for you? How should someone listening synthesize all this information we've covered?
Well, I think the core story for Q1 FY26 is that, it presented mixed consolidated figures on the surface. And that was mainly due to those specific operational challenges, like the big destocking event in CDMO and the ongoing tricky funding environment for biotech customers.
Right, the headwinds were real.
They were. But the deep dive also really brought out the underlying strengths in the segments, particularly in the base CDMO business once you adjust for that one-off. and also the very strong performance we saw in the consumer healthcare segment.
And the long-term vision.
And crucially, yes, it painted a picture of a company with a very clear, very ambitious long-term strategic vision. And importantly, they're backing that vision up with significant investments in key growth areas, like that ADC development we talked about. They're definitely playing the long game here.
That this really raises an important question, I think. In this world of just complex financial reports everywhere, how crucial is it really to look beyond those immediate headline numbers, to actually deep dive into the specific operational details, the future strategic investments, especially when you're trying to assess a company's long-term resilience and growth potential in a market as dynamic as pharmaceuticals?
Oh, it's absolutely vital. I mean, a quick glance, a superficial look, it so often misses the nuances, the context that tells the real story. Understanding that full picture, going beyond just the top line numbers, that's where the real insight, the real value lies for anyone trying to be well informed.
Couldn't agree more. Well, we hope these insights prove valuable for you as you evaluate similar information out there. Thank you for joining us for this deep dive.